Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. On the 1 hour chart, I do see us closing or encountering positive MACD, and we have made higher lows. We haven't made lower lows yet, so there's some integrity in this uptrend. On the 4 hour chart, I also do see the MACD converging at some point in time, possibly in the next 1 or 2 days. On the daily chart, we found support around where we left off in last week, and we did close higher, but the true resistance that I see is the 50-day moving average and 18-day moving average, so I'll mark that as resistance. And that price is at $287. And for support, the immediate support is where we left off last week, and that was $280.75. But if we do break that, the 200-day moving average is what I'm willing to bet is the true support in this trend. So what I see here is we are narrowing movement from up and down. There's not much volatility compared to what happened last 2 weeks. So what we have here is a possible triangle formation. The price range is going to get narrow and more narrow, and then we either explode to the upside or just totally capitulate and keep on going down. So we still have several days for that to happen. So if we were to move on higher and hit the resistance, that price movement will be about 1.4% move up. And if we were to move down and break the C's or remain on the support, that is about 55 basis points. And if we were to break it and continue on down and hit the 200-day moving average, it is about 1.7% move down. On to the next module, I'll compare today's current trend with this trend that dated back to August 8th, 2012 to November 5th, 2012. I'll point out why these two charts are similar. So what we have here is the up channel for several days and weeks, and then we proceeded to break down, touch the bottom Bollinger Band right here, and we made an attempt to reach the middle Bollinger Band, but not quite. It quickly got rejected, and we proceeded back down, and this is where we are. We are trying to reach the middle Bollinger Band once more right here. So we still have several days for that to happen. And so the trend in question, what we have here is similar. We have an uptrend for several days and weeks, and then we proceeded to go down, touching the bottom Bollinger Band, not quite here, but fairly close. But you do see the pattern starting to form, but in this instance it closed above the middle Bollinger Band, but it got rejected and proceeded to go down. And then this is a bit more forward looking, so we haven't quite gotten here yet, but this touched the middle Bollinger Band. So what I expect us in the current trend is to touch the middle Bollinger Band and proceed on down. So if the trends are similar, there's reason to believe the patterns or the forecast would also be similar. So what we have here is 1, 2, 3, 4 points, and 1, 2, 3, 4 points that are also similar. So the forecast model for August 8th, 2012 to November 5th, 2012, I'll go day by day where S&P 500 went back then. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. Back then, the S&P 500 fell about 4.3%, 4.3%. And here's the line. Let me cancel some of these lines. So again, the trend that I looked at was August 8th. Is better than most of the lines that I overlapped it to. So that is all. If you enjoyed this content, feel free to like, subscribe, and thank you for watching.